All right, this is part 4 of our moving average strategy where we use the 20 EMA and the 50 EMA, trend lines and Fibonacci's, pulling back at support and resistance on 2 time charts, 10,000 tick time chart and the 1,000 tick time chart. Using this together to create buy opportunities. And I want to go over the next series where we're dealing with choppy, difficult, hard to figure out markets, because it's easy to show any technique in a bullish or bearish market. Anybody can trade in those, and we need to learn when not to trade, when not to take trades, and we need to see if this strategy is good in a market that is choppy. So here we go. Let's start with just a quick picture of our rules. You can see the rules to this strategy here. Pause it and look at it, and then we're going to move right into the sideways consolidation markets here. So let's go. On the 15-minute chart in this red box right here, this red box, this is the area we're going to look at because it is choppy and sideways. Okay. All right. Now this is the 10,000 tick chart with the same exact area. And that's what it looks like for that. And then we have let's see, the 10,000 tick chart. Well, I think what we did was we were looking for Fibonacci. Yeah. We used Fibonacci pullbacks as support. So we drew the Fibonacci here at the low pivot on this to see where the 50% and it looks like if a price is bouncing off the 20 moving average and the 38% Fibonacci on the 10,000 tick chart. And we got another Fibonacci where we use the higher pivot right here to see if we can see. And it's from this pivot, we get the 50%, 62%, and that's where price is bouncing off of. So we got some good support areas that we're learning about from Fibonacci on the 10,000 tick chart. We can see that. Here is what it looks like on the 1,000 tick chart in that same red box area, how choppy that is. Now, again, we use trend lines, trend line breaks, and we're Fibonacci pullback to decide where we can take a trade, okay? What opportunities can we find in this market? All right, so let's look at that again. We draw all the trend lines that we think are relevant before we analyze each one. I just want you to see the trend lines that are created from each pivot. Every time price creates a new pivot, we use that pivot as a trend line. So right here, there was just this downtrend line. So right here, there was just this downtrend line until pivots are created. And then it came up here and created a brand new pivot, right? So we use this pivot now, and we follow price down, keep going until it breaks. And it broke right here with a new pivot, right? So that became the new trend line pivot right there. So we're looking and hunting. Here's a new pivot right here, and we just draw trend lines across until we here's a couple of pintails that poke through, right? So we draw trend lines on those as well, and we try to figure out, where in the world is this thing going to break through. Now, keep in mind, the best trend line breaks are trend lines that are almost basically straight down. When you start getting trend lines that go this way, then they're not as good in my opinion. There's a bunch of trend lines over here too, by the way, that we're going to look at as well. These trend lines we'll take a look at as well. So we're going to take a look at all these trend lines in this presentation and see if there's any good trade setups. Okay, let's start with the first area. We're looking at the first two right over here, these first two on the far left, right here. And this is a good little area. All right, we're able to get a trade off, at least get 1-to-1. We put our stop loss at the bottom. Price breaks the trend line here, then it consolidates sideways. We get long right there as it breaks out of the consolidation. So our entry point is right here, as you can see. Stop loss is here. A 1-to-1 target was hit. That was a successful trade. The next few are not so good. Okay, you can see how this fails miserably, actually. We got this one that comes down like this, and of course price breaks right there. Honestly, I don't like taking first candle breakouts. And if we do get a situation where price breaks out like really strong to the upside and there's no way of getting in it, usually we wait for a little tiny candle like this and see if it continues like that. And we use that little tiny candle as our entry and a stop loss in case price were to keep going. Otherwise, what we're doing is we're waiting for price to come back down. You don't jump in that candle. You wait for it to come back down, okay? So we would not have entered this up here. We would have entered it probably as it pulls back down. If it kept, depending how fast it dropped, if it dropped real fast, we might not even get in it. We might try to get in if it bounced right here and got in on really low. Let's say we were smart enough to do that right there and get in our stop losses right here. But look, it did nothing, but it failed no matter what. Because even if we got in all the way down here at the bottom, let's say we got in, we were really smart, we got in right here as it touched. I guess you could have, at that point, had such a small stop loss, you would have hit 1-to-1 or 2-to-1. So yeah, the lower you can make your risk, the greater your chances are to hitting a 1-to-1 target. Okay, but let's just say we got in. I got us getting in right here as it pulls back. Stop loss is under the pivot. First target's right here. Price does nothing but just come down and stop us out immediately. So that's a failure. Okay, that one failed miserably. All right, let's take a look at the next one. The next one isn't so good either, okay? But let's look how we might have done this. Price comes down right here like this, and it breaks right there. And sometimes I'll watch this other candle to see if it took a long time to take off. I might get in underneath it like that and try to get a 1-to-1 on it. But sometimes you don't have time to do that. So I probably would have waited. I'll try to wait for price to come back down. If price was to turn red right here, in a little narrow range and then take off again real strong, then when it breaks out over the top, I can use that red candle and shoot for a 1-to-1 that way. That's also one of my strategies. It's a momentum consolidation strategy. But here in this, we're using moving averages, trendline breaks, Fibonacci to try to create. So we wouldn't have got in until this thing came back down. Okay, we would have got in somewhere here or here. Stop loss would have been here. All right, first target would have been here. And as you see, price came down and stopped us out again, right, before going to the target. All right, you can't just keep staying in it, especially if it closes below the 200, because that's bearish. You really don't want it below the 200 in this strategy at all if you're trying to go long, okay? So let's go to the next situation here. And now we're looking at this right here. Yep, higher. They're getting higher now. Now, I don't see any trade setups in this. So in my opinion, I don't even think I would take a trade. If you're watching it through the whole thing and you're failing twice already, you're going to be very leery in jumping in on something like this and like this. Okay, you're going to be very leery. Look at these red and choppy candles. I wouldn't take a trade here, here, here. Over here, I would be very, very leery to taking a trade. But let's say we took a trade. You know, I didn't even see this one. Let's look at this one. Let's say price broke out of this trend line right here, coming down right here. But you see, now we got a new trend line over here because of this. You really can't use this trend line anymore when you've got breakthroughs like that. These breakthroughs up here, these breakthroughs have already kind of invalidated this trend line. You see what I'm saying? So if price did not poke up like this and we were still using this trend line, that's why I didn't use it, because stop loss would be here, take the entry here, you'd have a 1-to-1 because price came down, but it didn't pass. But the point is, we're not even taking this trade. This is not a trade we would take because the trend lines have all been reestablished by higher pivots. We got higher pivots. And before we drew this one here, this breakout immediately failed. Now we got a breakout right here where we're looking for a trade. Let's see what happens here. This is the third attempt from this strategy that we have. Price breaks out, starts to consolidate, pushes up. Let's say we get long. Stop loss is here. Target is up here. It doesn't go, it stops out for the third time. But it's just they're one risk. We lost 3 in a row. First one was a winner. So really we lost 2. Right, first one was our winner. So now let's take a look at the final area here. We still got these over here on the end to do still, the last 3 over here. And when you break it down and look at those, there's one that right here on the bottom that could have worked. This one could have worked, actually. I didn't calculate this one on our presentation right here, but like I said, the steeper they are, the better. And quite frankly, that would have worked. Let's look at it. Stop loss under the pivot. Let's see. Trend line comes down this way. You get a poke, but it goes back down and closes. You see that, right? This poke right here does not close green, so it didn't close above it. It did not close above it. The next one immediately turned red and came down past this pivot and created its own new low pivot, okay? Then it goes up and closes strong above that trend line right there in that candle. So that's the candle I'm using, and this is the stop loss. Comes down, turns red a little bit, get in, possibly, and then we should have 1-to-1 on that. We should. If not, we break even because it got close enough. We take our stop loss and break even on that trade. All right, but we're going to look at this area right here. This area and this area is kind of like one trend line. So let's take a look at that last one that we got there. Here's what it looks like. I love this pattern. And you see, we're making higher lows. Something you always want to look at is where the lows. And it's really a cup with handle pattern in the choppiness of everything. If we would really take a big picture and look at this, we got a cup with handle. And so that pattern is usually pretty good. So what do we got? Where does it finally break out? It finally breaks out right here on these candles right here in this area right here. You could say consolidation area right here. I got us getting in right here on that candle breakout right there. So I'm not trying to say, oh, we got in real low down here. We got in right up there. I typically will either use this pivot or whatever candles test the trend line. Now you can see these pintails right here that come down. So I probably would have used that as the stop loss. Not the pivot always. It depends on the consolidation area, and it depends on the pintails that are put in off the trend line. That's what I like to use. But let's do it. Entries up here, stop losses here. We got 1 target, 2 target. Let's look at it. We got 3 target, we got 4 target, and I didn't even go up any higher, but I'm pretty sure we got 5 targets. So remember, we won 1 in the beginning, lost 3 in a row, and then win 4 or 5. I would say that's profitable in a market like this, in a market that's just wacky, crazy, choppy like this. Still taking some losses. You got to try it if it's within the rules of your trading strategy. Why would you not try it? Take every trade that comes to you that's within the rules. And this didn't break any rules. If we look at the higher time chart right here, right? Price was pushing below the 20 moving average. But what's the rule? The rule in this strategy, if we go back and read them or listen to the previous video presentations on our moving average strategy, will remind you now is that you do not look for trend line breaks if the 20 is below the 50. Price will push down and even come down past the 50 sometimes and slam down in it, and the 20 EMA will not cross under it. And that's when you get the deepest, most difficult, and sometimes the best opportunities. But the rule is, as long as we have the 20 above the 50 going up, we're looking for trend line breaks at Fibonacci levels to go long. And we'll take every one that shows itself, because we don't know which one is going to work. And the ones that do work in a bull market, when you finally do hit the home run, should outperform all the losses. All right, so I hope you like this, and I'm going to keep practicing this. I like this strategy, and we'll see how it turns out. Peace.